Elon Musk is about to do something that could completely change how normal people buy crypto. And if this rolls out the way it looks like it might, it could be one of the biggest retail on-ramps into crypto that we have ever seen. Because instead of downloading Binance or Coinbase or crypto.com, instead of learning what a wallet is or what private keys are or how to transfer money to an exchange, you might just tap a ticker inside a post on X and buy crypto instantly. No new app, no complicated setup, no separate exchange download, just social media turned into a trading platform. Now, before we get carried away, let's slow this down and break it down properly. What has actually been announced? What's confirmed? What's speculation? And what does this mean for the market? And importantly for us in the UK, what does regulation say about this move? So let's get into it.
I am not a financial advisor. This video is based solely on my opinion and what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
First things first, X, formerly Twitter, has confirmed it's rolling out something called smart cashtags. And if you've ever seen somebody write something like this, that is called a cashtag. Right now, you tap it and you might see price info. But soon, according to X's own product team, those cashtags will allow users to trade directly from inside the app. That means you will see posts about Bitcoin, you will tap the cashtag BTC, and you will see live price data. You will see a chart and you can get the option to buy or sell, all inside X. This is part of a bigger push called X Money. X Money is Musk's long-term plan to turn X into an everything app. Messaging, payments, financial services, investing, and potentially now crypto. He has already secured money transmitter licenses across many US states. And that tells us something important. This isn't just an idea. This is infrastructure being built right in front of us. Now, this is important. X is unlikely to become a full crypto exchange overnight. More likely, they'll partner with an existing exchange or broker, meaning X becomes the front end. The partner handles the execution, custody, and compliance. But from a user's point of view, it will feel like you're just trading inside X. Let's talk about something that most people are probably underestimating right now, and that's friction. Right now, if you're brand new to crypto, here's what has to happen. You hear about Bitcoin, you download an exchange, you verify your ID, you link your bank, you wait, you deposit, you figure out how to use the interface, you learn about wallets, you worry about security. For beginners, that can be overwhelming. A lot of people never get past step 2. But imagine this instead. You're scrolling, you see a post about Bitcoin hitting a key level. You tap the cashtag, then you see a buy button and you confirm and you're done. That removes almost all the friction. And friction reduction increases participation. It always does. This is what Robinhood did for stocks. It made investing feel simple. Now imagine that, but embedded directly into one of the biggest social platforms in the world. X reportedly has hundreds of millions of active users. Even if just 5% of them try crypto, that's millions of new retail participants. And that is some serious order flow. Now let's talk about liquidity in simple terms. Liquidity means how easily something can be bought and sold without causing big price swings. More buyers and sellers equals more liquidity. If X makes buying crypto easier, more retail money will flow in. And that means more volume, more activity, and more movement. This will probably likely focus first on things like the Bitcoin, Ethereum, and maybe a few other major coins like XRP. It will not be looking at the tiny microcaps, because from a regulatory and risk perspective, majors are safer to roll out first. So if this works, Bitcoin, Ethereum, XRP will probably benefit most at the start, and probably not the random low cap coins. Now, here's the other side, because trading, when it becomes so close with social media, momentum could accelerate. You see a viral post, you tap it, you buy, thousands of others do the same. That creates faster short-term moves, bigger candles, more volatility, and that's not necessarily bad in my eyes. But it does mean markets could react even faster to social narratives. Now, let's be balanced here, because this isn't all sunshine. When trading is one tap away from emotion, impulsive decisions will increase. Right now, you have time to think. You have to open an exchange, transfer funds, and place a trade. That delay protects people from emotional reactions. But if you can buy instantly after reading something exciting or scary, emotional trading increases. That can lead to buying tops, selling bottoms, and overreacting to rumors. This is powerful tech, but it needs education to match it. Otherwise, people will treat it like a casino, and regulators will not like that. Now, let's talk about us here in the UK. The FCA has a strict crypto financial promotion rules. Since October 2023, crypto promotions targeting UK customers must follow specific standards. That includes clear risk warnings, no misleading statements, and proper approval pathways. So if X enables UK users to trade crypto inside the app, they will need to comply, which likely means geo-specific rollouts, region-specific rules, and potential delays in certain jurisdictions. So don't expect one giant global switch. It will probably be phased. My best guess is the US first, then potentially other regions with adjustments per country. And unfortunately, guys, that's just the reality of regulations globally. So could this replace the exchanges? The short answer is not immediately, but long answer, possibly over time. If X integrates trading, payments, custody, wallet features, and fiat on ramps, then suddenly a beginner might never need a traditional exchange app at all. That threatens some small exchanges because apps rely on beginner onboarding. But here's the key. Distribution wins. X already has the attention, and attention is the rarest asset in the world. If attention turns into transaction, that is going to be powerful for X. There are a key few signals that we need to watch here to see how it pans out. Firstly, we need to see who is the execution partner. Are withdrawals allowed? What coins are going to be supported? What are the fees? How strict is the KYC? And which countries launch first? Those answers tell us how serious this really is. Because if this just turns out to be a price viewer with a redirect, then it's minor in my eyes. If it's a full integrated trading platform, that's going to be major. Now, let's zoom out a little bit. Crypto adoption has always struggled with one thing: user experience. Wallets are confusing, exchanges are intimidating, and security scares people. But if crypto becomes embedded in platforms they already use every day anyway, then adoption will accelerate. Just like Apple Pay normalized digital payments, just like PayPal normalized online transfers. If X normalizes crypto trading, that changes behavior. And behavior change is what drives bull markets, not hype, not rumors, behavior. So what could this mean for potentially the next bull cycle? But I'm thinking about the timing here. If retail can enter faster, if social sentiment converts instantly into orders, if friction drops dramatically, the next retail-driven phase of a bull market could move quicker than previous cycles. We could see faster breakouts, sharper pullbacks, stronger narrative-driven pumps, but also quicker corrections. And speed increases in both directions could happen in my eyes. So as always, opportunity increases, but so will the risk. The risk will increase as well. They kind of move together, but it is potentially the beginning of something massive. A social platform integrating trading directly into its feed is a massive step forward into mainstream adoption. If executed properly, this could bring in new retail traders. It could accelerate market reactions and normalize crypto ownership. But it will require education, risk awareness, regulation alignment, and responsible rollout from X. And as always in crypto, the infrastructure often gets built quietly before the big price moves happen. So don't just watch the headlines, watch the execution, watch the rollout, watch the regulation. That's where the real signal is. And if you want to understand moves just like this properly, not just the hype, but the mechanics behind what it could mean for Bitcoin, Ethereum, XRP, and the wider market, that's exactly why we built the Crypto Wolfpack. It's a community focused on education, risk management, and understanding market structure, not just chasing green candles. There is a link in the description, or you can head over to cryptowolfpack.co.uk. Thanks for making it all the way to the end of this video. Please hit that like button, hit that subscribe button. If you see the button below my face down there and it says hype, press it. It's totally free to press and it will give the channel a boost. And don't forget, we've got brand new episodes every Friday, 7 p.m. of the UK Crypto Podcast. I will be linking this directly above my head. Stay sharp, stay informed, and I'll see you on the next one. And remember this, the strength of the wolf is in the pack.